Today's Tuesday tax tip has to do with the new tax extenders bill, which was signed into law on Friday, December 18th. This law, which the best part about this law is it makes certain provisions now permanent, because over the last few years, certain of these provisions have been law, but we've had to wait, at least in 2014, at least in 2015, we've had to wait until December to know that this was the law, even though it went retroactive till January 1st. The biggest provision, at least on the business side, in my opinion, is Section 179. Section 179 is the code section that allows you to expense certain items considered capital items that would normally be depreciated over a number of years. This provision allows you to expense those items all in the first year. For the last few years, the maximum amount of assets that were allowed to be expensed in 1 year under this provision was $500,000. However, in each of the last few years, this provision has expired, and we've had to wait for the law to be extended. And in 2014 and in 2015, this law was not extended until very late December. So while it is okay if you purchased an asset in January of 2015, you could expense it. It made planning very difficult because we didn't know for sure until Friday that you could do this. So again, what's nice is that this provision of allowing $500,000 of equipment to be expensed all in 1 year is now permanent. Because again, until this law was changed, it had reverted to the old law, which was only $25,000. On the individual side, the child care credit was made permanent, the $1,000 child care credit, which has been permanent for a while, and as far as that the credit would be allowed against your tax. However, since 2009, the law has been that you could still take the $1,000 per child, even if your taxes did not equal the credit. You could take what they call the refundable credit. So you could take a credit in excess of your income tax liability. That provision has also been made permanent. The American Opportunity Credit, which allows up to $2,500 per year in credits usually it's for children attending colleges, has been made permanent. Again, this was a year-to-year provision. So really what was great about this law was it made a lot of things permanent. There are some things that were put into play that were not necessarily permanent but are in play for the next couple of years. Bonus depreciation. Bonus depreciation differs from Section 179 because you can take it on, there's no limit on the equipment you can take it on. You can take 50% of the equipment and expense it in 1 year, and then depreciate the rest over its regular useful life. This provision will be in effect for 2015, 16, and 17. The percentage allowable reduces to 30% in 2018 and 2019, and then the provision eventually goes away. Another provision that was renewed for 2015 and 2016 was that people that sell their houses in a short sale and have mortgage loan principal forgiven, technically if you have mortgage principal forgiven, that should be considered income. There's a provision in the law that says if it's on your principal residence, that can be excluded up to $2 million. That is in play again for this year and for 2016, and hopefully at that point the prices of houses will start going up and we won't have to deal with this issue anymore. And there are a number of other provisions that the law has addressed, and I just want to mention a few of them but not really touch on them just because time won't allow it. There's an R&D credit, which is research and development. The built-in gains on S corporations has been reduced from 10 years to 5 years, and certain building improvements to qualified retail establishments, restaurant establishments, and rental establishments has been made permanent. Instead of a 39-year life, a 15-year life can be used. So if you have any of these few situations that I mentioned at the end here, please contact a tax professional and discuss them in more detail. But hopefully this tip brings you guys up to date, helps you out, and have a wonderful holiday, and I will see you again next Tuesday.